So what if I told you that the government might actually cut your UK state pension based on your overall savings and your overall retirement income instead? Now just imagine if your savings and your income determined how much pension you would receive rather than for how long you paid into the system for. So in this week's video, we're going to be wading into the very heated debate over means testing the UK state pension. We're going to look at the Australian age pension, which could be used as a template to follow in the UK. And we're also going to look behind the headlines to see if we're going to be all facing a more means-tested future. Now, there has been an awful lot of press coverage about this in recent months, and it's only getting louder. So I suppose the question we all need to ask ourselves is, should we be worried? Now, you're going to need to keep watching this video because this is one video you will not be able to afford to ignore. Well, welcome back to all the personal financial crew. But if this is your first time, a very warm welcome to the Economies channel, where together we're going to be learning the language of money and wealth, but also dedicated to mastering money and making financial wisdom available to all. Hi, I'm Simon and I'm a chartered financial planner in the UK, but not at the moment because I'm in the beautiful and stunning island of Ibiza. Now, I published a video a few months ago about the UK state pension, which I'm going to link in the description. And the comments section just lit up with a lot of very personal and intimate stories, but also with a lot of passionate debate. And one particular comment stayed with me about means testing the state pension, and that was about the government having access to our bank accounts to assess any potential means testing benefit at all. Well, it's getting very warm up here, so I'm just going to go down to the studio and I'll be back with you in a minute. Okay, that is a lot better. Okay, so before we get into this video, I'm just going to put the usual disclaimer here to say that this video is for entertainment and for educational purposes only, and it shouldn't be misunderstood or misconstrued as offering financial advice. So let's just cover a few points about the UK state pension just as a refresher. Now, to qualify for the state pension, you need a minimum of 10 years and a maximum of 35 qualifying years of national insurance contributions. Now, a qualifying year is if you're employed and you're earning more than £242 per week. You can also get credits towards your state pension entitlement by claiming a range of other state benefits, including child benefit, for example. Now, the maximum state pension in the current tax year is £221.20 per week, and that works out to be £11,541 a year. Now, this was increased by 8.5% in this tax year, and that was due to something called the triple lock. Now, the triple lock was introduced in 2010 to ensure meaningful rises in the state pension, since the anger that was generated and aimed at the government of the time after they increased the pension by just 75 pence a week in the year 2000. So the triple lock means that pensioners can enjoy rises in the state pension which are the higher of CPI inflation, average earnings growth, or 2.5%. Now, you may have contracted out in the late 80s and the late 90s, and that meant you would have paid lower national insurance as you opted out of the state earnings related pension scheme, or SERPs. And what that meant is not only did you pay less national insurance, but the government also then made a rebate into your pension scheme. Now, if you want to get a state pension forecast, you can do that online by contacting or visiting the address on screen. And as we are wading into the controversy about UK state pensions, let's cover one of the biggest out there, and that is that the UK state pension is a benefit. It is not a right. And that is because it forms part of the social security system, and with all benefits, it needs to be claimed when you reach your state pension age. And here is another link on screen. So why would a means-tested state pension even be considered in the first place? Well, there are currently 12.7 million people claiming the UK state pension, with an estimated 275,000 people entering retirement every single year, and 80% of those pensioners are expected to claim the maximum state pension available to them. So according to the very respected Institute of Fiscal Studies, the state pension is going to account for about 70% of the income for the poorest in society, but just 23% of the income for the wealthiest in society. On top of that, the government spending on the state pension is currently about £152 billion a year, or about 5.9% of overall national income. And that is expanding and increasing every single year. People are also living longer, and they're expected to be about 25% more people in retirement in 2050 than there are today. But there's also going to be a lot fewer workers making national insurance contributions to pay those people in retirement, and the increase in the shortfall is going to be met by the government. And on top of all that, there is widespread pessimism about the state pension, and about a third of all people think there will not be a state pension of any kind in just 30 years. Now, there is already a system of means testing benefits in the UK, and they cover benefits such as universal credit, job seekers allowance, employment support allowance, income support, housing benefit, the child tax credit, and the working tax credit. I mean, even child benefit is reduced on a sliding scale if just one of the partners earns more than £60,000 a year. So if you're finding value so far in this video, please hit the like button as well as a notification bell and subscribe to the channel so we can get this financial wisdom to as wide an audience as possible. And don't forget, this is your channel and this is your voice. So let me know if you think we should all get the same state pension regardless of how much we've paid in, or whether people with more wealth should receive less state pension, or perhaps the people who've contributed more should get a higher state pension. And what about the people who have not contributed at all? Should they get a state pension or just rely on another form of benefit instead? Let me know in the comments below. So why would we look to the Australian system for some sort of inspiration about means testing the state pension? Well, our auto-enrolment system in the UK has been hugely successful to encourage long-term savings, but also to reduce the reliance on the UK state pension. And this was in part inspired by the approach in Australia to their state pension and auto-enrolment. Now, Australians can receive something called the age pension from age 67. But this is assessed on both your income and your assets. And this assessment can either be made on an individual basis or as a couple. Now, the income assessment will cover income from all sources, such as part-time employment, dividends from investments, and perhaps any other pension income that you're receiving. But generally speaking, and this is very generally speaking, a single person could earn about £50 a week and not have their age pension reduced. When it comes to assessing your assets, they always will exclude your main residence, but they will cover investment property, investments in general, and other pension values. But a single person owning their own home could have about £350,000 of additional assets without having their age pension reduced. So what do you think of those limits? Are they too high? Or are they too low? So what's the argument for means testing the state pension in the UK? Now, means testing could ensure that pension resources could be targeted and redirected to those in retirement on the lowest incomes to help reduce some poverty in retirement. By reducing or eliminating the state pension for wealthier people, the government could also save money to address the shortfall in the funding issues which I alluded to earlier in the video. Now, you might also encourage people to save more privately, knowing that their state pension could in fact be lower. So what's the argument against means testing the state pension? Now, to implement this would need to have immense political will to handle the complex technology as well as the bureaucratic costs associated with this. Now, clearly, there's going to be a huge number of people who would be penalised who had saved and sacrificed diligently during their working lives, only be treated unfairly and to be shortchanged just as they get to the finish line of their retirement. Now, from the previous comments I've read on the previous video, there could also be civil unrest as well as a huge backlash from all corners of society. But this might only be possible if a sitting government was absolutely decimated at the elections and the new government had a massive majority in the House of Commons. And that new government had a mandate to redistribute wealth more fairly across society and who had minimal political opposition. So how could this even be monitored and supervised? Now, one possibility would be to allow the banks and the financial institutions to access your banking records, and when you reach certain thresholds, your benefits would then be reduced automatically. The government could access your eligibility for benefits more precisely and more accurately. And this could also help streamline the entire means testing process, not just for the state pension, but for all benefits in general. But surely that's not possible, Simon. But Spain already has mechanisms in place to enforce overdue tax payments and regulatory purposes by placing a debit on your account, your current account, until it's paid in full. Now, there are also similar processes in the USA, in the UK with HMRC, Canada, Germany, France and India. So what are the alternatives? Well, as the state pension is a pay-as-you-go system, there is no pot of money with your name on it. National insurance is effectively just another tax that we pay, and once this has been taken in one hand, it's given out in the other to the people who are currently retired. So how about opting out completely and investing your national insurance contributions elsewhere? Well, this may be worthwhile for those who are younger and who have got a longer time to retirement, but perhaps not those of a certain age like myself who are a lot closer to retirement. Now, the state pension provides secure and guaranteed income for life, and with the triple lock, it's got in some built-in inflation protection as well to generate meaningful increases over time. Just to demonstrate how valuable and how important the state pension is, an annuity to provide £11,541 a year, rising with RPI, for someone who is 66 now and in good health, will cost them £247,540 in June 2024, and that's what it's going to cost you to replicate equivalent to the state pension. So in conclusion, the debate over a means-tested state pension is far from settled. Now, whilst it offers potential benefits in terms of targeting support and cost efficiency, it also raises significant concerns about complexity, equity, fairness and public acceptance. But as we've seen with the Australian means-tested age pension, there are both advantages and disadvantages to the means testing of the state pension. Ultimately, the challenge will lie in balancing all these factors together to create a fair and sustainable pension system for all. So thank you for joining us in this controversial and divisive topic into the future of the UK state pension. So if you have found this video informative, don't forget to like, to share and to subscribe to the channel for more insights on important financial topics. Let me know your thoughts on means testing in the comments below. I will stand back. I've got a tin hat ready. I look forward to reading all of them in due course. Thank you so much for watching to the very end. Thank you for your time as always and for your patience, and I'll see you all again next week.